Well, I just want to formally welcome everybody to our online broker think tank. And the topic for this particular session is making more money, which sounds really good. In particular today, what we really want to dig into is how do you make more money per transaction? So it's about not just making more money by building a bigger and bigger business, but creating, I guess, efficiencies in your business, not just around productivity, but also around the revenue that you create. If you haven't participated in an online think tank before, the format, and I'll just quickly move to our agenda for today. The format is usually we have a presentation from an expert who delivers some content to us, or maybe a couple of experts. And then at the end, we have a quick discussion around sharing best practice, asking questions of some of the experts in the room. Of course, there's many more experts in the room than just the special guests. And then, of course, when we close off, the conversation doesn't end there. We do have a closed Facebook group for those who are not already a part of that, where we will continue the conversations and sharing of best practice afterwards. You might ask, why does the online broker think tank exist? Look, it's a passion of mine to see the industry go forward and to go forward with collaboration. So this is about people coming together and not just talking about what's happening in their business right now, as in what deal do they have on their desk and what lender should they put that with, but really looking at how as an industry do we build better broking businesses, and we are ready for any disruption that happens, and we're constantly innovating and pushing ourselves to move forward and come up with better solutions for our customers. So you will see in this room, there's people from every single aggregator, there's people from banks and people from businesses that support our industry. And that's the way that I like it. So I think that's fantastic. The people that talk to you today, they may have businesses, they may be experts in a particular area. They're not here to just sell you something, but wanting to add value to your businesses. Of course, if at any time there's somebody that you come across where you like what they do, by all means, contact them and network. There's nothing wrong with that at all. Look, so just to quickly go through the agenda. So today I'm going to present on making more money. And then we have a new segment, which I think should be a little bit of fun, which is an opposing views segment, where we're going to discuss fee for service. So we've got two brokers who are giving their view, one saying yes to fee for service, one saying no to fee for service. So they'll talk a little bit about, I guess, what their views are on that and why and what they do in their business. There'll be opportunity for some Q&A at the end. And I expect this to become a big discussion in the closed Facebook group over the coming weeks. We also have Tamara from Prime Capital. We'll be talking about deepening relationships, especially that by engaging with or cross-selling into commercial finance, and how having a commercial finance customer is actually a deeper relationship than a resi customer. So that'll be an interesting discussion. And then we'll be opening up for discussion before we close today. So I'll do some quick rules. If you can leave your camera on where possible, I understand some of you cannot, and that's okay. It's just nice for other people to see your face, and it's a good opportunity for you also for people to notice who you are, and if you're looking to collaborate or share best practice with anyone, there's an opportunity for you to know who else is in the room. Chat is available throughout the entire online think tank. So if you do have a question or a comment, feel free to actually put it into the chat. Some of the questions we may not get to or we may not be able to discuss, but we will come back to you and we will continue those conversations in the closed Facebook group. And of course, please be respectful of all thoughts and opinions and keep this a safe environment. That would be fantastic. Okay, so let's make a start. So obviously I'm presenting first. So I'm Andrew Stevens, for those who don't know me. My background is in business coaching, but then having worked for a number of major banks and then also worked across the third-party aggregation groups, groups including the likes of Yellow Brick Road, Val Financial, Aussie Home Loans, Plan Australia, and most recently I'm the National Business Manager at Nectar Mortgages. So there's 3 core components of a successful business that I've placed into a formula. And I do use this formula when doing business coaching. And it's quite a simple format. It's distribution times productivity times revenue. They should say equals success, not plus success. I really need an assistant. If anybody out there knows someone who's a really good assistant, tell them to contact me. Someone needs to go fix all my mistakes. Look, and the idea is that, you know, the distribution core is talking about how many brokers do you have in your business, or how many significant lead sources you have in your business. So this is your distribution footprint. Another way to look at it is how many people know you or will refer to you or consider you their broker. And there's other elements that sit under that, which I won't go into today. The second, when we talk about productivity, I measured that in the number of products or services or home loans that you write per broker per month. And then finally, looking at revenue. Revenue is how much revenue do you generate per transaction. So if you look at that as a formula, it could be, you know, 1 broker times 3 loans per month times $1,500 equals $3,000. Or, you know, just to give you another example, you know, 3 brokers times 3 loans per month equals, times 1.5 thousand equals $9,000. There's some things that you'll quickly pick up about this formula, and the intention of this formula is to actually help you identify what are the key areas in your business that you need to start looking at in order to grow how much money that you make. Now, of course, the first one there, we talk about distribution. You'll quickly notice that distribution is the easiest way, by growing distribution, is the easiest way to grow your business. So the multiples of how many lead sources you have or how many brokers you have working under yourself dramatically increases the amount of revenue that your business creates. And then, of course, second to that, productivity, then, you know, the number of deals per broker has the next level of impact. And then finally, revenue per transaction probably has the least amount of impact on how quickly you can grow your business. However, there's something that this formula doesn't take into consideration, and it's kind of what we want to focus in on today, is that having a big business or having lots and lots of brokers can be quite expensive, or having a lot of staff to create productivity can be quite expensive, because really what's the most important thing is not revenue, but is revenue minus expenses, which equals your profit. And many times, and I've worked for a number of, as I said, a number of different aggregators, and I'm not pointing any fingers here, but typically your discussion with your partnership manager or your coaches, they're really focusing on how much do you settle each month, which is a great number. But what's really important to business owners is how much money you have in the bank account after expenses. And the other thing this formula doesn't take into consideration is the complexity and management of a large business. So interestingly enough, and I've got a lot of evidence for this, sometimes the difference between a big business and a small one is actually just the size and not the profit. So I work with some very large businesses that make good money, and I work with some quite small businesses that make really good money. But of course, the key there is, sorry, I think someone's off mute. Sorry, just give me 1 second. There we go. Yeah, of course, sometimes it even just comes down to your preference of whether you want to run a big business or a small business. So one of the key things we're going to look at today is how to run an effective business that, of course, will give you the results that you want, but also then look at, I do apologize for that, but actually look at making sure that the business that you do have is profitable. So there's something that I've picked up that has been happening over our industry for some time. I think this is very important to look at. There's two key factors that are impacting our ability to make money per transaction. The first one is kind of within our control, but the second one isn't. And the first one is that typically mortgage broker businesses that have existed for around, I guess that 3 to 4 year mark, start to see customers who they worked with in year 1 and year 2 come back for secondary needs. And this is what most people call loan maintenance. So with loan maintenance, one of the challenges is typically a transaction takes just about as much time to actually process, or it costs just as much money to your business to process, but it doesn't have the same revenue that it generates. So what tends to happen is over time, you start to spend more and more time on loan maintenance, but you're not generating the same revenue. So hence the reason why sometimes after that 3-4 year mark, you start to feel like you're working harder than you ever have before, except you're not making as much money as you used to. The other component of that, though, is while you're concentrating on maintaining customers and looking after customers' secondary needs, what you're not doing then is actually chasing that new customer, and you're leaving cash on the table. So your future customers, unfortunately, are not getting serviced. The other component which we can't change, which is really frustrating for all of us, is the increase in compliance that we all face. And also with that, banks have had this way, and I understand some banks may be on the call, but too bad. Banks have kind of pushed or shoved some of the responsibility of processing back onto the broker. And I've been in the industry a long time now, and I've seen slowly, the amount of administrative tasks involved in processing a loan now and being compliant has dramatically increased. So of course, then that's actually costing us per transaction more money than it was previously. And unfortunately, today I don't have any solutions to that, but I'm sure we can discuss that later on in the closed Facebook group. So I guess what are some of the solutions? And this is what we want to look at today to actually start to generate more, I guess, revenue per transaction. So there's 4 things that we're going to look at. And I'm not saying that you need to implement all of these into your business, but let's open it up to discussion. I'll give you some, I guess, some key points from each, and then also introduce some experts in the room as well. So the first one is cross-selling. So that is by per customer, selling them another product, therefore increasing revenue per transaction, which is one opportunity. And today we will have Tamara dig into that a little bit further for us around, I guess, the impact of cross-selling can have to your business. The second one, which is something which I'll cover off very shortly, is about capping the cost of maintenance in your business. So it's about putting a cap on how much it actually costs while still driving more revenue, therefore increasing, I guess, the amount of profit that you make in your business. We'll be talking about fee for service. One of the challenges that we have as an industry is that the price of our service is actually set by the bank and not by ourselves. So we have no control over the value of the service that we provide or how much we charge for it, unless we do introduce a fee for service. And there's pros and cons of that, which we'll look at in our opposing views segment coming up. And then finally, we're talking about segmentation and farming of your existing book. And there's some great methods which I'll discuss in detail around how you can use that to generate more revenue per transaction and build a more profitable business. So capping the expense in your business. So this is, you saw the other graph, and this is kind of what we want things to start looking like, is where at some point the cost of your business stops increasing, but your revenue continues to increase, creating more profitability. So there's a couple of ways that you can do this, but one of the key structures in a business that I've seen that works is actually almost splitting your business into two businesses. That you have a business that is specifically for establishing new customers and attracting new customers and servicing them. And then you have a secondary business that actually looks after the maintenance of those customers and any return customers or additional needs that they may have. Now, this is not just in, it's not talking about having two separate ABNs, but you're talking about creating a whole new line on your P&L that is specifically for customer maintenance, and also creating a very distinct separate customer journey that those customers experience. So the way that we do that, the first thing or the first step that you need to take is actually start to measure the revenue that you generate from the ongoing relationship that you have with customers. So this is when customers return for a loan increase. They go through a divorce and you get clawed back, but then you get two loans for the price of one, or it might be that they purchase an investment property, they look to purchase a car, whatever it might be. You need to measure how much revenue you're generating from that particular aspect of your business. The second step then is you need to then deduct the value from your overall revenue. And with that, you can then establish a budget, which you can then spend on customer maintenance. And the idea is that you start to build a process or a business or an offering within your business that is distinct from what you offer your new customers, that makes it within budget of what you've allocated for it, and eventually even becomes profitable. So this is where you may want to be hiring a particular person to do just customer maintenance, or you might be engaging in an outsourcing service. And initially, and I know this isn't popular, initially this may mean that the service that return customers get is not at the same level of excellence as what you're giving your new customers. And I've heard the argument that, especially people are very passionate about the service they deliver, is they take it quite personally if people don't receive the best possible service. But the thing which I'll ask you to consider in this is also consider your future customers, because right now you're not servicing them at all. And it's only by actually making customer maintenance profitable that you can actually start to reinvest in customer maintenance and make that a better service for your customers. Now, if anyone ever wants to dig into this a little bit further, please feel free to reach out to me at any stage. Always happy to have a chat. The second solution is segmenting and farming your database. So what this involves is, and look, I understand not all CRMs in market make it easy to do this, and initially it is a little bit of work, but you do want to start tagging your customers as they come in and actually segmenting them into I guess a few different things, but the main ones which I want to talk about is 4 categories, and I believe that these people are the most important people to your business. The first one is people who are advocates of your business. Now, this may not necessarily mean that they produce the most revenue for your business. And I know personally, too many years ago now, I'm talking, 15 years ago, I went to see a particular customer who at the time didn't have a job. And for many of you, you would know that that typically means it's a waste of time when trying to get a home loan. But I sat with this particular customer and we actually worked out a strategy around who we could leverage off to get a new job. I spent a good hour with him. Even to this day, I still get random phone calls from people asking for a mortgage, although I haven't written one for a long time, who's been referred to me by this person. And look, a lot of people talk about advocates are those who you give them a wow experience. But in my experience, and I'm happy to be wrong on this, is that some advocates, it's just purely their personality. They're just the type of person who wants to be considered that person who knows somebody who can do something for them. If you come across these people, You need to target them and give them a whole ton of love. Make sure they're in the room with other people because they will sell for you. It's the same as influencers. So people who are influential in a particular community, high net worth individuals who, of course, their loans generate you more revenue. It's good to be nice to those people if you want to slowly increase the average revenue per transaction. And the final one is just people you genuinely like and you want to spend time with. What you can do with this, and this is going to be my tip for the day, is you can actually start to create within your business a premium membership. Now, what does a premium membership actually look like? And I've got some suggestions here on the screen. It could be that you open a closed Facebook group that's exclusive for only people within those 4 segmentations. And some of the feedback that I've had is people panic, go, well, if I open a closed Facebook group for them and I tell them that they have 24 hours a day access to me, I'll answer any of their questions straight away. I'm there whenever they need me. I'm not going to have time to do my job. What I have found is some of these type of customers are the customers are most or the least likely to actually bother you. It's usually the annoying customers who are shopping around and comparing you to 5, 6, 7 other brokers and some online comparison website that's going to be annoying and ask a lot of questions. These people just want to be associated with you because they genuinely like you and love you. And by having them in a closed Facebook group, it helps you be able to control and generate and focus advocacy, as well as increase your social media footprint. Now, you can provide them with a referral offer where they get a $50 gift card if they refer someone in, or movie tickets or whatever it might be. You have a number of events each year that you invite these people to. Now, these events, typically there's 4 types. So say one is a celebration. That could be Christmas. It could be the anniversary of your business or whatever it might be. Entertainment, invite them all to a football match, give them tickets. And you're talking about, you could spend 10 grand on one of these events. But it will be worth it in the end, because if you only need to get 2, 3 loans out of this group to justify that. Education. Now, this is an interesting one. And I just want you to picture this scenario. Imagine going to your best accountant or your best real estate agent in your town or your city and saying to them, look, I would like to run an educational event specifically for my premium club members. And these are the best of the best customers that I have. Would you be willing to collaborate with me and provide me with the room? I'll let you speak for the first 15 minutes, but I'll also let you invite all of your best customers as well, and we can do this for free. The best thing is if you get your advocates in the room with the best clients from some other person's business that you're collaborating with, you don't have to sell a thing. These people will go around and want everybody in that room to know that they know you and that how great that you are. And finally, of course, doing community events as well, which of course, allows you to advocate into your community that you're a good person, that you genuinely care about your community, which many of us brokers do. Of course, there's specific EDMs or emails that you can send them around content, and also offer to collaborate with them around if they're particular business owners or they're from a particular field, say you're focusing in on lawyers, that you can do collaborations with them as well. The other thing, which I don't usually mention, but I think I will, if anyone's looking for a really good transition to retirement plan, this is it right here. These are the customers that you don't sell off, that you take with you and you look after for the rest of your life because you actually like dealing with them. And your trail's not going to run off as quick because they are valuable customers. And then all the customers are going to say that you don't particularly like dealing with, or you don't really care for, you can then go sell that book to someone else, or bring in someone else to look after that book as well. So this is actually also a really good transition to retirement plan. So look, so that kind of just finishes off, I guess, 2 of the 4 points that we're looking at today. Hopefully you've taken some notes, and if you do have any questions at any time, feel free to reach out. But right now, what I'm going to do is move into our opposing views segment, which I'm quite excited about. And today we're interviewing Adrian Smith from the Home Loan Hub out at Narellan. He is a large AFG broker who's have quite a successful business career, not just in broking, but in some other fields as well. And also Brenden Lowbridge from Money Links up in Newcastle, who's currently with Plan Australia. Brenden has a great business that's growing very, very quickly. And I'm just going to move now to our segment on opposing views fee for service. So welcome to the opposing views segment for today. As you know, we are looking at fee for service and whether it's a good thing or not a good thing, or it may be somewhere in between. But the idea is that by having these discussions that we will, I guess, explore this a little bit further, and you can get some value out of it and make some decisions what you want to do in your business. Our first guest for today is Adrian Smith from Home Loan Hub. And I'm just going to quickly hand over to him and just ask him to quickly introduce himself and tell us a little bit about who he is and what his business does out in, it's Narellan, isn't it?
Narellan, yeah. Well, you've already said it, Adrian Smith from Home Loan Hub at Narellan. We commenced business just under 2 years ago, right at the start of COVID, which was a bit of fun. But yeah, it's been a good start. I mean, I've had 5 years of broking before we opened the office here, myself and Pete, my business partner. We've got 3 brokers that operate out of here, plus 2 admin staff. We also have our own coffee shop, just for something different. It's business is good.
Yeah, look, it's a great spot. So you're in retail shop front on the main road, which has great exposure for you as well. And I've been to the coffee shop. It does have good coffee. So smart innovation. Just to tease it out a little bit, because I think in the promo I mentioned that you're not only a mortgage broker but an entrepreneur. You're one of the few people in our industry who's now, I guess, has come into the industry as a business owner first and then built a brokerage, rather than someone who might have been just really good at finance and someone said, hey, you should do this for yourself, and then build a business. Just what's your business background? I understand you've worked for a few other different, I guess, business models in the past or industries.
Yeah, well, my background is retail predominantly. I owned Blockbuster stores for a number of years, from '99 through to 2017. So best part of 20 years.
Last.
Yes, I was one of the last. I was the very last store in Sydney. Yeah, so when that was in '99 when I first bought my first store, I was in my early 30s. I was making lots of money, and I thought I was the smartest guy in the world. But I soon realised that I wasn't. It became a very difficult business after a while. So '99 to 2005, it was great, and after that, it started to wane and it got a bit tougher. But we persevered, and people that probably shouldn't have been in business in the first place went broke really, really quickly as soon as there were problems. And then, but while people are leaving the industry, they're throwing money behind them. So I was just picking it up. So we managed to survive a long time. We also had a cold rock ice cream franchise inside one of our stores, which did help sustain us for a little bit longer. But probably around about 2014.
Okay, so everyone, I'm getting a lot of feedback that people are struggling to hear the audio from Adrian. I don't want you sitting there having to suffer through that. I do know that the next video from Brenden Lowbridge is a lot clearer. What I will do, so that you have you don't lose the content, is I will get that video closed captioned and make it available through the closed Facebook group, so you can hear what he has to say. If in just a couple of minutes, what I'll do is I'll just quickly go over, I guess, some of his key points that he makes. So Adrian is sorry, just give me one moment. Okay, everyone can hear me. So Adrian is not a fan of fee for service, and his core reason being is it doesn't suit the value proposition of his particular business. So it was an interesting discussion I had with him, because he's someone who's quite astute when it comes to making money, and he's ran a number of successful businesses before you may not have heard it, but he actually had the last blockbuster video franchise in Sydney. And you have to be good at business if you're the last one to survive. And one of the ways that he actually did that was he opened a Cold Rock franchise in the middle of his blockbuster video. So look, it's a fascinating conversation. So I will make sure that you get the chance to hear that. But yeah, the key message out of that was for him, fee for service was not the mechanism he thought was best to filter out what customers he should deal with or not. And from a values perspective, he wanted to make sure that all customers had access to him and his advice, regardless of whether they could afford it or not, which I thought was a really, really good message. I'm just going to now jump into the second video from Brenden Lowbridge. The audio is a lot clearer, I do believe, and we will take it from there. So just bear with me. So it's my pleasure to, I guess, welcome Brenden Lowbridge to the discussion. So today, as you know, we're talking about fee for service in our segment, or our opposing views segment, where we're talking about whether you should, shouldn't, or what's the pros and cons of that. We've already heard from Adrian Smith from the Home Loan Hub at Narellan, and now we're talking to Brenden Lowbridge from Money Links up in Newcastle. So welcome, Brenden.
Andrew, thanks for having me, mate. Appreciate it.
Just to kick us off, if you could just tell us a little bit about, I guess, who you are, what you do, and a little bit about your business.
Yeah, great. So we're a local brokerage here in Newcastle. We've got a team of 9 people, which includes 3 of us in a broker role, and then the rest of us as support. We essentially have a bit of a niche where we, I guess, specialise in people that are trying to create wealth. So we really want to assist, inspire, and educate our clients to create wealth. So ultimately, they don't end up, having to rely on the pension and things like that. So a big part of our process is an education process. The loan is a part of that, but we really want to see people live a great life and a life full of good choices and abundance, and have an enjoyable retirement instead of a tough one, I guess.
Yeah, really good answer. And as there's been a bit of a theme that I've been discussing with a few people around this topic lately, where I'm starting to work out that fee for service has a lot to do with why you're in business and what you're trying to achieve with the business that you're in. So it's not always a case of is it right or wrong. It's just, is it right for you and your business and your customers? Which leads me to the obvious question. What is your, I guess, your current views or standpoint on fee for service?
Yeah, look, it's been a evolving, I guess, point in our business, because really we're sort of in between. So we've got a hybrid model where we definitely will charge a success fee now for certain customers, and they might be ones that have a certain plan as far as, doing more active property investment strategies, which might be duplexes, triplexes. They might be using corporate structures and things like that. So we do still have a portion of our clients that are very interested in that. And some of our other clients sort of graduate through education to want to do those type of things as well. So we make it pretty clear that as those start becoming, we've sort of got a line that we can show them where we define a loan becomes a more complex loan. And then that's essentially when we'd have a fee for service. So that would be on a success fee basis. It's transitioned, Andrew. Prior to that, what we generally do is, we had that in some respect for certain loans. We also had our clawback fee in place before that obviously was no longer able to be charged. So we removed that as a result. And when that clawback fee legislation change came in, I did look into that. I went back through 3 years worth of invoices. I looked to see who I'd quoted, and what I actually realised was who I'd actually invoiced, I should say. What I actually realised was most of the ones I did know were coming. So they were those more active investors that made it pretty clear they were going to do something over the next 18 months, sell, capitalise out of that project, do something else. And those type of people were normally the ones that I was charging those fees to. So essentially, by drawing the line in the sand of a more straightforward and then a more complex deal, and charging for the more complex ones, we think that we should be able to mitigate most of that clawback risk moving forward.
Oh, very good, very good. So what's the, how has that impacted or changed your business? As in, there's what I'm hearing is that there's a very specific skill set that you and your business has, or value that you add to your customer that maybe they can't get from somewhere else necessarily. So probably the question I want to ask is in that process of looking after your customer, that customer journey you take them on, where does fee for service sit? What does it mean? How do you explain it to the customer? What is it for you?
So in an initial call, which would be normally a 15, 20-minute sort of discovery call we would have with someone who's new to our business, normally towards the back end of that conversation, either they will ask or we'll actively bring it forward. Hey, this is probably important for you to know. This is how we get paid. We want them to know that before we go through the process of collecting their documents. One thing I've been very, very cautious of saying, I never say we're a free service. I always say that, we offer a service. We basically, how this process works from here is we will collect all your documents. Okay. We will do, and this is, provided that, it's I'm talking more of a straightforward purchase here. Also, we'll actually do all the due diligence. We'll review all your documents. We'll come up with a solution for you. Part of that will be a meeting that we'll have with you and so on and so forth. I map out that process and I say, we cover the cost of all that. And ultimately, we want to present you with something that you're happy with, that you want to proceed with. And if you do, down the track, when the loan settles, we'll get paid by the lender. So I just wanted to make that comment, because I never ever say that we're a free service. I've adopted that mindset for quite a few years, and I don't like anyone in the team to ever say we're a free service. So I make that pretty clear when we're talking to people, that we cover all those initial costs for them, because we know that if we do a good job, we'll get paid by the lender. For the more complex files, that'll be a bit more of a detailed appointment. But in that initial conversation, I'll sort of say to them, look, this is what we would classify more of a complex transaction. It will require one of our senior team members, and there's going to be a longer strategy meeting that's going to be required on top of our normal broker meeting. And so as a result, we'd have a fee for service. Now, we have it in our office that fee can range, and we really leave it up to the discretion of the brokers, because sometimes, you've got to be commercial, and if there's a good payoff down the track, you might see that a small fee is suitable for a commitment out of the client to allow for some of that initial additional due diligence and, more meetings and more meeting prep. But, they can range anywhere from, say, $1,500 to sort of $3,000 as a guide, just basically to get a commitment from that client. Because what we did also find is, particularly in the commercial space, as we were getting into that space more actively as an office, we did find that we were burning a lot of time on it. And that was, in many cases, holding us back from doing 2 or 3, residential simple loan applications. So we really had to, have a bit of a sit back and look at the cost benefit analysis. And that's really why we brought it in, mate, was a combination of the commitment from the client and just to subsidise the fact that there was quite a bit extra due diligence and time involved.
Now, your way of actually, I guess, articulating and setting the process out for them of exactly what you do, and then when you do have a complex deal, actually, going even in further into that, saying, well, the reason why we charge a fee is not just because we need to make money, but this is the service you're going to get. This is the value we're going to give you, and that value is equal to, and then you quote the fee. So a lot of people I say to, or I've spoken to, is, well, if I ask for a fee for service, the person's just going to go elsewhere. Well, not necessarily. I think it has a lot to do with how you position it, when you position it, how you sell it, and that you're actually genuinely adding value. Would that be somewhere around where your headspace is at with why you do what you do?
Definitely, you probably make me sound a bit better than maybe how we do it, but I mean, in essence, mate, it's really the people that are a bit more complex generally know they are. So I find that it's a conversation, and they're commercially minded, so they're trying to have something more about your experience in having done it yourself and having had experiences with clients like them. And then for the people we aren't charging, we just don't want to undervalue the service. So we're happy to say that, hey, look, we are getting paid by the lender for this. And because of the type of transaction we're doing for you, that is essentially all we get paid. But there is a cost involved in us and that time and a value, as you've mentioned, to get to that point. And I think that's important. One of the things I picked up at the Better Business Summit one year is they said, every hotel you stay at will always tell you that you're getting complimentary Wi-Fi. And I mean, we just expect that we're getting Wi-Fi. Like that's just that, you'd be, pissed off if you didn't.
Yeah.
But what they're good at is they're good at telling you what you're getting. And I think that's a good reminder in business that, we have to sometimes remind our clients of what they are actually getting when they deal with us. Because if we just come up with a lender in, 2 days after, the next day after meeting them, or 2 days after collecting their documents, and we know that's the right lender for them. Sometimes I think, it's like I guess no different if a real estate agent sells your property within the first day after listing it. Often people will think that the guy's done no work and he's undersold the property. So I think explaining the value and your expertise in some way is critical.
Now, we're talking today about making more money. What other advice or tips do you think you could impart to brokers today just to help them, I guess, make a little bit more money out of their business?
Okay, I think it really depends where you sit. If you're someone that's in a niche and you're doing more complex transactions, you're sitting mainly in the commercial space, you probably already know that there's not that many competitors to you that can do what you do. And I think that it just is paramount that you'd be supplementing what you do with a fee, particularly given what we talked about before, that it's a more complex scenario. You have to have the business banking relationships with the right bankers. There's a lot of pre-work. Like some of these development transactions we've looked at. Like I think it took 2 years for us to get paid by St. George, and this client had been talking about the dreams of doing this development probably. Literally 2 years or longer to me. And so that's a lot of conversations to have with someone, and we did that one without a fee. So that one was a good lesson for us. But so I think that if you're in that position and you're in a niche space, I think that introducing that is very important. If you're, a broker that's specializing in the residential space and you think that, basically you'd rather remain competitive because you see yourself on par with what other people are delivering, it's probably going to be more an exercise about, understanding what your value proposition is before you set a fee. That's my personal opinion. I know some people are just great brokers and they may be like other brokers and they just are confident in charging a fee, and that's awesome. And I admire those guys. For us, we wanted to remain competitive in that space so we could still get, all the first home buyers. And, I still think we'd get a large percentage of them likely if we did charge. But for us, it was like, look, we've got a profitable model with what we're doing. So if I was in that space, rather than probably looking at a fee, I'd be thinking about how I can improve my productivity. And I think before a fee was introduced, it'd probably be having a good look at your team and your structure and actually how productive you are as a broker. So if you're not really, I guess, excelling at a reasonable level as far as your submissions and your settlements, that would be the first step I'd be looking at. And how you basically grow that is essentially with the team and support. That's what we've really worked hard with our brokers, as is we make sure that they're supported and they're able to do what they do best, which is generate clients and service their clients.
Just can you dig a bit deeper into that? And look, I've been lucky enough that I've known you for a little while and been able to watch from afar. You grow a fantastic business. And what you have is a fantastic business. I had a great conversation with someone from MFAA recently around, the differences between a great broker and a great broker business. And I think one of the things that you've successfully done is you've made that transition from being a great broker to running and owning a great broker business. And I know this wasn't on the agenda, but is there anything that you can add around that? I think it's an important part of making more money. And it'd be amiss of me not to ask you that now got your attention. Is there any elements of that you can share with us?
Well, I'm still definitely in that transition. So I mean, I definitely don't proclaim to have done it. Someone like Theo Chambers at Shaw, who's just the CEO of an epic brokerage. I mean, that's an ultimate example in my opinion. And he shifted from doing really good volume, being a top 100 broker, and doing that. So I mean, he is in that role implicitly. I'm still the most active writer in the business, but what I have tried to do, with the team is implement systems and structures I have in place for them. Because if you want to ultimately have them replacing the business you write, they need to have the infrastructure to be able to do that. So I think what sometimes I noticed was, you might have a director and broker that has some support, but then they bring in another broker and they expect that broker to be able to run around without any support and do excellent volumes, which we know is not the case because we've got support, right? So that's what I try to focus on. Connor's a great example for that with us. He come from another brokerage, and I think within month 2 or month 3 of being with us, he tripled his volumes just because he had excellent senior support under him, and got recognised at a national level for that with the Rising Star Award recently. So that's probably a classic example. That's more on him, but what we did do was we obviously set up the support and the infrastructure under him to allow him to do what he loves and does best, which is attract more clients and service them.
Oh, brilliant. Well, look, Brenden, thank you so much for giving up some of your time to, I guess, share your experiences with us. It's been an absolute pleasure. I've definitely taken a few things away from that conversation as well. So, looking forward to I guess staying in contact with you and seeing what happens into the future. But look, take care. Thank you very much.
Thank you, mate. I really appreciate it. You have a good one.
Well, I hope that was a little bit better than the first video. So I do apologise for that. Just couldn't get the sound quality where we really needed it. As I said, I will get a copy of that video or both videos into the closed Facebook group and get them closed captioned so you can read the comments as well. We will have some time at the end to come back and explore some of that conversation, which I think will be very valuable. But now we're just going to move to our next segment where Tamara is going to be, I guess, speaking to us about deepening relationships. Tamara is the national, I guess, BDM for Prime Capital. Prime Capital is an alternative lender, previously known as, these who call them private lenders. I don't particularly like that term. I think it comes with some connotations that are not that great. Look, so she's going to discuss that with us. Tamara, are you in the room? I believe she may not have joined us just yet. It looks like we're about 10 minutes early. All right, look, well, what we're going to do, just while we're waiting for Tamara to join us, I think it's probably worthwhile having some discussion around the fee-for-service piece. So look, some of you, look, and the way that we're going to run this is if you do have a question, if you could put it into the comments, and what I'll do is, where there's an opportunity that I can speak to something, I will. However, there's quite a number of experts in the room that I'm happy to hand over to and get some other points of view as well. So the first question that's popped up is, if you charge fee for service for some complex applications as well as receive commission after, how do ASIC or AFCA look at that? Look, I'm happy to take that one initially. So charging a fee for service is well within the rights of a mortgage broker in the regulator. Actually, did I see William in the room? William from I might, if he's willing to, I might pass this question to him. Sorry, give me one moment.
Yeah, Andrew, is that me?
Yes, yeah. Thanks.
How you going?
Yeah, very, very good. I'm just going to stop sharing my screen for a second and put you on the big screen. So, so for those who, William, actually, just while I'm doing that, can you just quickly introduce who you are and what you do? He's one of the experts in our closed Facebook group.
So hi, everyone. Thanks for having me, Andrew. So just a bit about myself. So I'm actually an insurance broker who specializes in the financial services industry. 10 years in the industry now, and very excited to be working in this segment.
Thank you. So what's say AFCA, because you have plenty of dealings with AFCA and ASIC. What type of complaints have you been, I guess, running into around fee for service? Is there anything that you've come across that we need to be aware of?
Nothing specifically, to be honest. So there hasn't been any. So just a bit of background. The company that I guess my company, Scott and Broad Professional Risks, is quite a big player. So some of you might be insured with us. We have a professional indemnity insurance binder with CGU that lets us obtain a tailored offering. So just a bit of background. Obviously, I've been dealing with a lot of AFCA complaints, a lot of claims in the industry over the last few months. But so nothing specifically has turned up in relation to a fee for service. However, a lot of it's just more come down to normal complaints in respect to, the broker didn't give me the appropriate advice in relation to my loan structure. And you know what, I went unconditional on a property and the property couldn't settle. And then I had to run around and get extra funds, pull funds from my super. I ended up losing investment income because I had to use my super. And then it took us, so that's one scenario. Another scenario potentially was when they went unconditional on a loan, saying that the broker had advised them that they could receive it. In order to obtain the property, they had to go with a provider that was offering a much higher rate. And then it took them a few months for them to actually be able to refinance down to more of a normal rate. So they were going against the broker in respect of the high interest charges that they got over the last few months.
Yeah, very, very good. Very interesting too. So look, it is fairly safe. The only thing which I have come across recently that I will just highlight is it is important that you provide the quote prior to going and doing investigations and having them agree to the quote for the fee.
Yep.
And it does also help if you're consistent in who you charge a fee to or not. So if it just seems like you're just charging a fee to cover clawback, then that can become an issue with ASIC. We've got about another 4 minutes. Look, Tamara has joined us, so which is great. So we'll hand over to her shortly. But does anyone else have any other questions, thoughts, concerns in regards to fee for service right now? How much do you charge? That's a really good question. Look, I've seen anywhere from $350 to about $900 is usually what I see when people do charge free for a service. Brenden, who was just on, charges a little bit more. However, as he explained, he charges specifically for complex deals, and he does have a scale of how much he charges depending on the complexity of that deal. So that is something. Oh, look, absolutely. David O'Toole, and David's another expert from the closed Facebook group. Yeah, it's very important to actually make it very clear as what the fee is for. Do not say it's to cover clawback. You'll get in trouble for that. Is the fee refundable on settlement? This is an interesting one, which I don't. If someone else has an answer to this, I'd like to hear it. Yes, it is, but I think there is a risk in advertising upfront that there is. I would say you probably need to talk to your license holder to get their views on that, because what you don't want to appear to be doing is using the fee to discriminate against particular customers. So just be careful on how you communicate that the fee may be refundable if the deal does go through or doesn't go through, et cetera, et cetera. So just something to think about. We've got time for one more question or thought. Okay, so if no one else has any thoughts, what I might do now is actually hand over to Tamara, who is going to take us into talking about deepening relationships. Tamara, are you available?
I'm here. Can you hear me okay?
Yes, we can. Brilliant.
Hello, hi. Thank you so much. Oh, look, I saw two people leave as soon as I started talking. Sorry about that.
Don't look at that. It could be disheartening.
I don't know who that was, but thank you so much for having me here. So yeah, look, as we discussed, what I'd like to talk to you today about is just creating stickier customers through offering them a holistic solution through not just looking after the residential side of things for clients, but also their SME lending. So yeah, look, as mentioned, my name is Tamara, and I have been a residential BDM for a number of years. So I've spoken to a few of you guys in my past life, and a few years ago, I jumped ship and now work for Prime Capital doing SME lending. So what I wanted to have a chat to you about is just a bit of a SME space, just alternative lenders and how you'll be able to offer not just the residential lending to your clients, but also the SME, and a bit of feedback that I get from brokers, why some brokers are preventing themselves from writing that business and maybe outsourcing it. So got a bit of a presentation for you just to run through the SME space. So tell me, Andrew, if you can see my screen.
Yes, I can. So it's come through.
Awesome. All right, you guys, thanks so much. So look, as I mentioned, I speak to a lot of my brokers that predominantly do residential lending. And, our conversation now is around, how can they offer in the SME space as well. And I guess the common feedback I get is, there's a perception that SME is convoluted or that SME finance is slow. Often the brokers would outsource the leads that they have for their SME clients to specialist brokers. So they would have a relationship with someone and they may be missing out on doing it themselves. And that, basically they just don't know much about in that space, who to talk to, which lenders to approach. So they prefer just to outsource it out. So I'm here to tell you that it's actually really not convoluted at all. There are a lot of alternatives to the banks. So when your self-employed or sole trader customers come through the door, you'll be able to write their residential business as well as help them out with any SME needs that they may have. That way, we're hoping that you will deepen their relationships with your clients by being a one-stop shop for their, personal needs as well as their commercial requirements as well. Look, we know that obviously SMEs in the recent times as well with obviously with COVID faced a lot of challenges. Your SME clients went to the banks. The banks were very cautious at the wake of the pandemic to offer lending to new customers who they didn't know. Clients, obviously their cash flow was impacted by COVID. There were more stringent verifications required from the banks. A lot of the clients were rejected, so they were sort of left high and dry during the pandemic, which is good that we're turning that around now. So there's a great opportunity now to help out your clients. So the survey conducted by Benjo of your SME markets had identified top 7 reasons as to the challenges faced by your SME clients on the reasons that it's hard for them to find, to get funding. So 43% of SMEs reported that the top 2 reasons for them were stricter lending requirements and lengthy approval times. So this is a big segment of your clients that need brokers' help to help them to navigate through the challenges faced. So what I wanted to chat about is the overall opportunity of the SME lending for brokers and how to diversify your business. So what do we know? We know that 2.4 million Australian businesses generated over 700 billion in revenue. That's a lot of money. We know that 25 to 30% of your clients are self-employed, sole traders or SMEs. So that's a big chunk of your business. And we know that 1.4 million of Australians are self-employed and sole traders. So what's the opportunity here? The opportunity is to capture not only the residential business of those clients, but also commercial. So, the survey says that potentially up to 30% of the clients that come to your way, you're not talking to them about, do they need cash flow finance? Are they looking to expand their business? Are they looking for funding? Do they need new equipment? But you can be that one-stop shop to help out in both. And we know that there's been an increase in the last 3 years where 17% of brokers were diversifying in that space. It's now grown to 28 and increasing as well. So what's happening in Australia in the SME space post-pandemic? Well, we know that the manufacturing is coming to Australia. We know that SMEs need funding to get their businesses back up and running. Restaurants, hospitality, and so on. There's a high demand now. They may have issues with, obviously providing financials for the last 2 years being closed, but now they're back up and running and they need funding. We also know that skilled migration is coming back to Australia, and what that all means is that there will be a higher demand and a great opportunity to grow your business by providing SME solutions as well. In terms of what it means money-wise, what the market is, so 45% of total business loans were written in the small business and medium business space. And we know that according to the Benjo survey, that there was a gap of $119 billion reported by SMEs of the unmet lending gap. That's a big gap and a big opportunity for your business to tap into that and diversify your business as well. So in terms of how we're lending to SMEs, also we conducted the survey, so we can tell that 95% of SME loans are secured. We know that half of them are secured by residential properties. And you guys know residential properties. So half of all the SME lending is within your realm of what you do right now anyway. So there's some good statistics there. I mean, the housing market is obviously very strong. We're seeing a lot of customers sitting on great equity within their properties. And there's a great opportunity to get them funded through the assets that they already have. So I'll just run you through some alternative solutions. Unless, is there any questions that, sorry, I missed it, Andrew. Should I stop and ask questions or is it to the end?
So I've encouraged people that if they do have a question, to pop it in the chat first, just so we don't lose the flow of the presentation. But if anyone does have any questions, by all means, start putting it into the chat now. Directly after this, presentation, we'll be going into discussion anyway. So it'd be good to, have some things to talk about as well.
Okay, so look, I've put together a bit of a rundown of different opportunities to take your SME clients to, so alternative lenders. So who we have here, they are non-banks, such as Prime Capital, whom I work for. We are non-bank, so we don't fall under NCCP. We provide specialist solutions, so we essentially lend to your clients against their commercial properties, residential properties, land and development and so on. So we do securitized loans. We're very quick, very nimble, and luckily for me, I've got delegation, so I approve your clients' loans up to 10 million myself. So we operate very different to banks. We provide approvals within 24 hours and we can settle as fast as 5 business days. And we don't require any financials. So we don't care about your client's past history, their trading history. We just lend against their properties and it's self-declared income. Other alternatives is private lenders. So I just wanted to clarify that Prime Capital is not a private lender, but there is a big market of private lenders. They have very, high risk appetite. There are pros and cons of using private lenders, but that sort of comes after us. It's completely unregulated sector, and some of them, like, there's a lot of pros, but I guess the big cons is that to make sure the private lender you're using has the funding to actually fund it at settlement, because they use a lot of the funds from investors, friends, and family. And then there's a rise of peer-to-peer market as well, and some online and fintech lenders as well. So there's just a little summary of different ones. To put it from this perspective, two basic things for lending is the security and the servicing requirement, right? So customers that have no security and no servicing, they are likely to get their funding through credit cards or the bank of mum and dad, as I like to call it. Customers that have servicing capacity but don't have security, they would go to cash flow lenders, such as Mula Money, etc. Customers with high security and they have servicing demonstration, you would take them to, a bank. They are highly regulatory, but they are cheap. And for customers that have no servicing capacity, but they have a lot of security, that would be where Prime Capital, for example, would come in, and the likes of Pepper, Liberty, and Latrobe, and so on. So that's sort of the 4 boxes that you can place your SME clients to. The opportunity of using alternative lenders in the SME space, we are faster. There's a lot less paperwork required. For example, in Prime Capital, we don't have a direct channel, so all of our referrals are coming from the brokers, and we know that overall customers are much more satisfied when they use the services of a broker, as opposed to going directly to the bank. So we have a quite high NPS score of plus 70 on that. We're also very good in the cash out spectrum. So unlike the banks, we don't cap the cash out required, and we don't control the funds. So a lot of your SME clients will need cash out from, let's say, their property to fund their loans, to fund their businesses, and we don't control the funds at settlement. So we just give it to the client and they use it. So I'll just give you a couple of examples of things we've done. So, for example, we have real estate agents that come to us quite often. They get the dibs on really good properties, and they need, quite a bit of funds to purchase it and on sell. So, an example, we had a real estate agent that was buying a $8.3 million Paddington property, and he needed $4.98 million. He had obviously. He works on commissions. It was very hard for him to demonstrate any servicing with the banks. Also, there was a big time constraint because this was a really good opportunity for him. He required fast finance. He literally needed to service within 5 business days. So he came to us. We offered them 60% LVR, interest only, up to 3 years. We had a special running at 4.95% interest only, up to 3 years, no minimum loan term. So he came to us, bought the property, unsold it at a high profit, and went on as a very happy man. This was a SME client of mine over in WA, a very successful orthopedic surgeon. He had all his bank accounts with ANZ. Unfortunately, because elective surgery was not available during COVID, he essentially funded his whole business for 2 years on credit cards. By the end of the pandemic, when he could run his operations again, he racked up over $1 million in credit cards, paying off his wages and so on. In which case we closed off his credit cards, we gave him over $1 million cash out, and we refinanced his house using the equity there. So now he's a happy gentleman, back up and running on his operations. So in terms of, the kind of business we write, so a lot of the SME clients that approach us, 70% of them using residential property and commercial and land. So essentially, look, look out for customers that have equity in their homes, equity in their commercial properties, and you can offer them really, really quick solutions through the alternative channel as well. Look, I tried to stick within my 15 minutes, which I have.
Good job.
Stop my share.
I
hope I didn't go too fast. This presentation usually takes about half an hour, so I just...
No, look, and I'm sure if anyone has any specific questions for you, they can reach out, contact you after. But look, this does lead into our, I guess, the discussion part of our business. Look, there's a few other experts in the room which I wouldn't mind calling on as well, just probably to kick us off after this particular session. I'm just going to, and Tamara, can you just put your contact details in the chat too? That'd be fantastic. Look, I was having a conversation with someone recently around some of this. Fabian, are you in the room?
Sure am.
Yeah, brilliant. Thanks, mate. You had an interesting analogy around, and look, so just some background. So Fabian is the principal broker at the loan, what is it, the loan lab?
The lending lab.
The lending lab, sorry. The lending lab. But prior to that, was in senior management at a large aggregator, and prior to that, an ANZ business banker. So he has that business banking background. You're talking about if you just deal with a residential loan, there's a certain element of or value of trust that's associated with that. If you then take on the investment properties, it increases that trust. And then if you get into commercial asset finance, self-managed super fund, etc., all that complex stuff, there's another layer of trust that is created. Do you want to just expound on that a little bit more around how that actually impacts on your ability to retain a customer?
Sure. So I think we would all agree that if you were a mortgage broker and you had a customer that had dealt with, say, a personal loan broker for years and years, that you would look at that and go, I'm dealing with a bigger asset. It's more important to the customer. There's more trust involved in the transaction. If I do a really good job of helping them into their first home, I'm going to build a better relationship with them than the guy who just got them a car loan or a personal loan. I think that continues. Where I saw as a business banker, I got a lot of referrals from mortgage brokers that would refer their customers to me, and the relationship would start to increase based on the importance of the transaction and the complexity. Where if you are a mortgage broker who has just helped someone to refinance their home, there's one level of trust and relationship there. If you help them build an investment property portfolio, then you're probably building a greater level of trust. And if you're helping them with their business, which is sometimes more important to people than their actual home, then you're building a deeper level of trust and engagement. Where I think that gets dangerous from a making money perspective with brokers is when we leave the higher needs on the table and we say, I'm not going to deal with someone's business banking, or I'm not going to help them through difficult times. I'm just going to do the easy stuff. You're outsourcing that relationship to someone else who can then start to build a deeper connection than you do, and you can potentially lose your customer in the process.
Yeah, really good insight. And I think it is important that everybody does have an offering in that space, because potentially you could lose customers off your book, so good quality customers off your book. It doesn't mean you have to do it all yourself. You can outsource it to someone else. David O'Toole, are you around?
Yep, here, Andrew.
Yeah, look, I think you're probably a good person to comment on this. I called you the godfather of commercial lending in the industry. I know you look really young, but you've been around for a while. Do you have any commentary around that, especially what you've seen? And I know that for example, you have set up a business yourself where you don't do any resi at all, but it kind of exists to allow people to have an option in commercial. What are you seeing around this space and the impact on, I guess, brokers' abilities to make money?
Thanks, Andrew. Yeah, I think it's more like the grandfather rather than the godfather, but thank you for the intro. Can I just, I really, Tamara, I really liked your presentation. I think for everyone watching today, I think that gave a really great overview about understanding what's possible. I think it's about 2 or 3 weeks ago, I did a webinar where we talked about the concepts of diversification at the moment. And one of the main things I talked about is not underestimating the trust that a client has in you once you've done their mortgage and they've got to know you through that process, because the process is complex and time consuming. So you spend a lot of time talking to the client. So that trust is quite strong. And the biggest challenge for SMEs today is they're really not sure who to turn to or where to go to get trusted advice around get business lending or asset finance advice, and advice that's impartial to an individual lender themselves. So I think being able to be conscious of that, as Tamara mentioned, understand what those opportunities are. And if the client trusts you and you let them know that you have options available to you to support them with SME lending or asset finance, they would rather deal with you than go try and find somebody else to do it for them that they don't know. And going back, Andrew, think about your analogy earlier in the presentation around, do you almost have to sort of split your business into two? I think the same concept here is that you're splitting your business into two. Do you create your own team around writing SME business? If you have the capital and the means to do so, is that a track you go down? If you don't initially have those means, do you find a partner that can actually support you, that can actually, you can still have the conversation and make the clients aware that these services are available, but then you have a trusted partner to do that. Now, that might be whether it be a referral relationship with a specialist firm, or it might be, as Tamara mentioned, just having a smaller selected group of specialist commercial funders or asset finance funders to support you.
Look, very good. I really appreciate your input as well. Does anyone have any quick questions? If you don't, there's just a quick poll I wouldn't mind sticking up on the screen. I'll just give it 2 seconds if anyone's got any comments or questions. All right, so just a quick poll. So just back to the fee for service piece. Out of curiosity, do you currently charge a fee? Yes, no, some customers only, or is it something that potentially you'd like to know more about? It's good to see some answers coming through at the moment. Yeah, so look, there's just a few more still coming through, so I'll just give it another couple of seconds as people comment. Yeah, it's an interesting result, so I'm just going to share the results now. It should just pop up on the screen. As you can see, it really isn't something that is popular. You're talking about only like 7% of the room at the moment, they charges a fee for service, or 16% for some customers only. Look, it is. Look, it's something which I'm interested in, especially if. And look, the good news is both sides of government now have kind of said that we will retain trail commission. I do think, and this is where we're going to talk about the big picture and perhaps off into the future sometime. I think there is a need for the industry at some stage to make a transition where brokers get the opportunity to set the price of their service. So currently, as we discussed earlier, lenders have increased the amount of work that we need to do to get a deal approved. Regulators have done the same thing in the amount of work that's involved in actually meeting regulation. And then also, within running a business, all of a sudden there's more HR issues, and we need to be better at marketing, and we need to be better at all these different elements. As a self-employed mortgage broker, especially if you're on your own, there's a lot more to do now than ever before. But one thing that we haven't seen is we definitely haven't seen an increase in the amount of commission that banks pay us. And I do think as an industry, it is becoming harder to run a profitable business without having that control back. So I wouldn't mind getting just some thoughts from the room around, where do you see this going? Do you think there is a need? And look, fee for service may be the answer, or is it, or what other ways could we actually gain control over actually being able to set the value of our service ourselves rather than rely on the banks to tell our customers how much we're worth? Any thoughts? And I'm happy for people to unmute and just talk. Don't be afraid. I'm not going to hold you accountable. There's no such thing as a wrong answer. The point of this is to just get discussion going, and maybe solutions can pop up.
Andrew, I just had a comment, and it's not particularly around fee for service on the mortgage side for the mortgage brokers attending today, but one of the things you have to now do on consumer personal loans, because you don't automatically get a commission from the lender, going through the regulatory process, you do have to get a signed credit quote and let them know literally what you're charging them.
Okay.
So even in personal loans, we're now starting to have discussions with the client around the value of the service that we're providing to them and the fee that we're actually charging. And so it's disclosed through a signed credit quote, but also some of the lenders that do consumer personal loans or asset finance disclose the amounts payable to brokers as well. So I suppose in that sense, it's being able to validate your advice and the value you get from them on that. So that's just probably more of a comment rather than what happens on the mortgages side.
No, look, that's a really good comment. And Brenden Lowbridge covered that off a little bit too when he mentioned that it's important to actually explain to the customer the value that you're providing, whether you're charging a fee or not. Whether it's the bank that's giving you the money, you actually want to be able to justify why the bank is giving you that money. Also think it's something that we need to protect into the future, to ensure that we don't get challenged again around what value do we actually offer customers, especially ongoing. So, the comment at the Royal Commission around trail commission was that, brokers get money for nothing, which is ludicrous if you've ever worked in a mortgage broking business. There's a whole lot of additional services and value that we add to our customers beyond simply making an introduction to a lender. I do think it's important as an industry that we get better at articulating the value that we add to our customers, not just to our customers, but to the general public, to regulators, et cetera, et cetera. And I think it's going to be an ongoing piece of work that we all need to be involved in and be aware of. Because look, in some ways, we've been able to grow organically as an industry on the back of banks being terrible at what they do. But what I'm starting to see now, especially with 65% of deals being written by brokers, is that our competitor is no longer the lenders. Our competitor is starting to be other brokers, and potentially, we're seeing a lot of consolidation within the industry, and potentially looking at who else might join the industry then within the broker industry to try to disrupt the broker industry. And I think as an individual broker, one of the things that it will always be a point of difference, allow you to keep, keep ahead of some of the larger, bigger brands, is that not just that having a great personal brand and delivering great service, but being able to articulate well what is the service that you actually do provide your customers. Any other comments? Got 3 minutes. There's got to be someone else out there who has
Andy,
yes,
to be a little bit controversial,
go for it.
Having managed a couple of months ago 110 different mortgage brokerages,
Yes.
they've never been more profitable than now.
Right.
I get that transactions are harder to do than we've ever done, but in some areas, property prices have increased by 40% in the last 12 months. And when our commission is based on the size of loan, not the number of loan,
Yep.
how much sympathy is there outside our industry when year on year, most brokerages couldn't justify any government relief because they'd made more money year on year, 3 years back to back. Now, I get that's not everyone and not every part of Australia and certainly not every niche, but if our biggest competitor are other brokers, is charging a fee for service really the way to win them?
Really good point. I like that. See, this is the type of comments we need more of. Look, it's a really valid point. Like, I guess the other point around that is, and many of the people in the room, like we see customers' bank statements and pay slips all the time. Let's be honest, being a broker is a pretty good gig compared to some of the other industries out there right now who haven't seen an increase in income for quite a period of time. As in, yes, we're experiencing inflation right now, but wages are kind of stagnated. A good point, Fabian. I'll take that on the chin, and I think it's a real valid point. We have time for one more comment or question.
Andrew?
Yes, Eric.
On your previous point that as individual brokers and small brokerages, we need to be able to articulate our value proposition. I found that such a challenging thing, because as a small brokerage, you wear 6, 7, 8 hats and you run your backside off to fulfill your compliance duties, to sit down, to take time out and to try and think of the value proposition that you as an individual broker have, and then articulate that properly, and then get that message out through either social media or through marketing, other means, is incredibly challenging. Larger brokerages that have more resources, have the less wear hats, are able to do that much better. So any suggestions as to how to do that?
Yeah, look, does anyone else have any suggestions? I'm sick of hearing my own voice. Surely there's some people in this room who are far smarter than I am.
Andrew?
Yes, Brian.
I'll put the video on. Sorry.
No, you're right.
Andrew, that last question, has that particular gentleman considered looking at outsourcing some of the back office component of his business?
Yeah,
I do have some outsourcing in place, and we have quite a streamlined back-end process. But it's more for the smaller operators still that just wear all those hats and trying to figure out how do I make this work? How do I find the headspace to find out what my value proposition is, and then how to communicate that?
What I did early days was, have you got a workflow chart that you have for a typical client? Yeah. What we did, we color coded red, black, everything got a color. So if it was a red activity, it's a non-income activity. So basically looking at a transaction from start to finish, adding up all the red activities. So if you look at all the reds, how many of those reds could you pass on to someone else? We found that really helpful in the early days.
And to focus and then double down on, I guess, delivering customer service. And
so basically try and minimize the number of red activities you do through a day.
Really good, Brian. Look, the other thing to consider, Eric, and this is a big trend I'm seeing right now especially in social media and online marketplaces, is consumers don't trust big brands like they used to. They want to know who is the individual behind that brand, and they want to be able to engage with that person, see that person. They want to know that person's relatable, authentic, genuine, approachable. And you see that across the board with big banks, political parties, religious institutions, etc. One of the advantages you have as a single operator broker or a smaller business, and this is probably where you need to find some clarity in how to get the message out, is there is people who want to know who you are and what is it about you that makes the customer journey very unique when they come and deal with you. So that may be as simple as doing some Facebook Lives, running a closed Facebook group, actually they're doing some social media, or even engaging in, so if there's a particular type of customer, like a first homeowner, investors, whoever it is that's your customer, find out where they hang out online and where they go to for advice, and infiltrate those groups and become a part of the discussion. And I think that goes a long way in, one, helping you work out what messages resonate with your customers that they see as valuable, but also as a stage for you to start practicing articulating the value that you offer, and to actually attract new customers. But look, guys, that does end the session. I hate going over time. But I would encourage you to continue the conversation in the closed Facebook group. It does give you an opportunity to ask questions anonymously as well, if there's things that you don't want to disclose about your business. But look, thank you so much, everyone, for attending today. Thank you very much to all the guests and the people who were happy to speak up and give their view on something. Much appreciated. I will send a follow-up email just with, I guess, how to contact some of the people who spoke today. Also in the chat, I did leave an opportunity, and I like to say this at the end of every single session. If your business or yourself are in a point of crisis where you're genuinely feeling overwhelmed and very challenged, you are not alone. I'm happy to take a phone call or organize a meeting with anyone at any time if there's something really burning in your business that you need help with. I'm not looking to sell you anything, charge a fee. We're here to help, and if it's something that I can't help with, I'm happy to leverage off the network to introduce you to somebody. But please don't suffer alone. Let's have each other's backs and support each other. Look, take care. Have an awesome week, everybody. And thank you very much for participating again in the Online Broker Think Tank.
Thank you, Andrew.
Thanks, Andrew. Great session.
Thanks, William. I really appreciate you jumping in there too.
No worries, man.
Thank you.
Chat soon.